Welcome to Market Momentum. This week has been a wild ride, hasn't it? We're going to cut through all that noise and get right to what's really driving the markets. It's all about the Fed, a big tech sell-off, and believe it or not, the one currency that's pulling all the strings.
So the Fed spoke, and a tech giant basically face-planted. What in the world does that mean for your portfolio? Well, that's what we're here for. We're going to connect all the dots for you and really break down what these huge moves mean for stocks, for metals, and of course, for crypto. All right, here's the game plan. We'll kick things off with the Fed's, let's call it foggy forecast. Then we'll see how that put tech stocks under some serious pressure and figure out what's next for gold and silver. After that, we'll dive into crypto, which is at a major crossroads, before we reveal the one single chart that you have to be watching. Okay, first up, the Fed. Fed Chair Powell's latest comments, well, they've thrown a whole lot of uncertainty into the markets, and the reaction was, you could say, pretty immediate. And this is the quote that really says it all. We are navigating in the fog, and when you're in the fog, you have to slow down. Wow. I mean, that analogy is so powerful, right? It's a crystal clear signal that the Fed is hitting the brakes, and that instantly changed Wall Street's entire game plan for when rate cuts might happen. And just look at this. This chart shows you just how fast everything changed. Before Powell spoke, the market was basically flipping a coin, a little over a 50% chance of a rate cut in January. After he spoke, forget about it. That probability just evaporated. It went to nearly zero. So the whole timeline for easier money has been pushed way out. And that, my friends, changes everything. So how did this stock market take all this news? Well, it was like watching two different movies at the same time, a real tale of two markets. The impact wasn't even close to being uniform, and we saw this massive split between the broader indexes and the tech sector. And this slide just lays it out perfectly. You've got this split personality in the market right now. On one hand, you have the Dow Jones, full of those more traditional, old-school companies, and it's hitting new record highs. But then you look at the tech-heavy Nasdaq, and it is a completely different and frankly much gloomier story. So what was the big trigger? One word, Meta. They had a really disappointing earnings report, and the stock just plummeted, down at 12%. And that wasn't the end of it. It created this negative ripple effect that dragged down a bunch of other big tech players right along with it. You see Qualcomm, Microsoft, and Nvidia all taking a hit. All right, let's switch gears and talk about precious metals. How are gold and silver handling this new environment? You know, it's a pretty tricky spot for investors right now. And this is the big question on everyone's mind, isn't it? After this recent drop, is it just too late to sell? Do you hang on for dear life? Or is there a smarter play to be made here? Okay, so the analysis here is pretty clear. Whatever you do, don't panic sell at these low levels. The strategy is all about patience. The expectation is that we'll see a short-term bounce, a little reactionary rise. The smart move might be to sell into that strength. But as for buying right now, probably not recommended. There are just too many headwinds. Oh, and keep an eye on silver. It might actually see a stronger rebound than gold, simply because it fell harder to begin with. And now for the real wild card, the crypto market. It seems to be in its own little world, completely ignoring any good news out there and just following its own bearish path. The weakness in crypto is really telling. I mean, even with some potentially positive news floating around in the global economy, crypto just failed to rally. At all. That tells you that its own internal selling pressure is the one in the driver's seat. We're seeing all the big names testing these critical support levels, the price floors that have held up before. And the fact that a major player like XRP has already broken through its floor, that's like a loud warning bell for the entire crypto space. For the king, Bitcoin, this is the number you need to burn into your brain, 105,500. This is the absolutely critical support level that analysts are laser focused on. If Bitcoin can't hold this line, well, it could open the floodgates to a lot more selling. And it's a very similar story for Ethereum. The line in the sand here is 3,680. That is the key price that absolutely has to hold to prevent a much deeper downturn for the second biggest crypto out there. Okay, so let's bring this all home. Let's tie all these seemingly separate stories together because there is one chart, one single chart that helps explain this split between stocks and metals. And honestly, it's the most important one to be watching right now. And here it is. The underlying driver of all these moves across different assets is the strengthening US dollar. The dollar index, which is just a way to measure its strength, has been quietly creeping higher. And its break above that key 99.40 level, that is the hidden force behind everything we've just talked about. This isn't just a currency chart, it's the master key.
This sequence right here explains exactly what we're seeing. It's pretty straightforward. Step 1, the dollar index rises. That makes U.S. assets look way more attractive to foreign investors, so what happens? Capital flows into U.S. stocks and bonds, pushing them higher. But at the exact same time, things like gold and silver, which are priced in dollars, become more expensive for everyone else. That puts downward pressure on their prices. See, it's the one unifying thread connecting it all. And that leaves us with the big, critical question. As the dollar continues to flex its muscle, which one of these asset classes is going to be the first to break from its expected path? Something to think about. Thanks so much for joining us. We really hope you found this breakdown valuable. And if you did, a like and a subscription would be amazing. We appreciate it.